Hello students, today we are going to start our tax class with residential status. Now we will start residential status, the very basics of residential status, first with section 4. Section 4 of the IT Act is the charging section. It provides that IT shall be charged on every person at the rates prescribed for the year by the Annual Finance Act. As you can see that section 4, IT shall be charged on every person at prescribed rates for the year and by the Annual Finance Act. Charge of tax will be on the total income of the assessee. Assessee, as you already know, is the person who is being taxed. So the section 4 is actually the charging section. Now we come to section 5. What does section 5 have to say? Section 5 provides the meaning of total income in terms of the residential status of an assessee. So therefore, for the purpose of assessment, the meaning of residential status is really very important. Section 5 provides the meaning and the scope of total income in terms of the residential status of the assessee, and therefore for this purpose only, for the assessment of the meaning of residential status is very, very important. So we are going to go further into the details of residential status. So till now we have done section 4 and section 5. Section 4 is the charging section and section 5 provides the meaning and the scope of the total income in terms of the residential status of an assessee. Now we go to the assessee. How do we classify the assessee? Actually, the income tax, it classifies the assessees into two broad categories, right? I hope you can see the two categories according to the personal status and according to the residential status. So, according to section 6, we are now doing section 6. Section 6 classifies the assessees in 5 categories as mentioned here. What are they? According to the personal status and according to the residential status. According to the personal status, there are how many categories? 1, 2, 3, 4, 5 categories. And what are they? According to the personal status, the first category is an individual. The second is in Hindu undivided family. The third is firm or any other association of persons. The fourth is a company and the fifth is every other persons. Now we come to the other category, that is when it has been classified according to the residential status of the assessee. Now the residential status are mainly of two types. Either he is a resident or he is not resident. Now if he is resident, I mean the assessee, if he is resident, then he can be resident and ordinary resident, that is ROR, or he can be resident and not ordinary resident, that is NRNOR. So section 6 classifies the assessees into 5 categories according to the personal status and according to the residential status. So we would now focus on the residential status of the assessees. Now as you can see, section 231, it classifies the taxable persons into 7 categories actually. But for the purpose of residential status, the Act contemplates only 3 categories of assessees, like I have just told you. It is based on the time period of their stay in India. So the residential status, broadly, there are 2 categories, like they are residents or they are non-residents, and if they are residents, they can be of 2 categories. They are resident and ordinary resident, and resident and not ordinary resident. Okay, so here are the three categories of the residential status on the basis of their period of stay in India. The three categories are resident and ordinary resident in India, that is ROR, resident but not ordinary resident in India, that is RNOR, and non-resident Indian, that is NRI. Okay. Now, before we go into the further details of this chapter, we should keep certain things in our mind. Number one is an assessee can have different residential status for different previous years. Okay, so in one previous year he may be ROR, in another previous year he might be an RNOR or maybe an NRI. So each year you have to assess the residential status of the assessee before charging the taxes. So an assessee can have different residential status for different previous years. Next is the assessee cannot have different residential status for different sources of income. That is actually not possible. Like an assessee for a particular previous year will have any one of the residential status. Either he is ROR or he is RNOR or he is NRI. So he cannot have different residential status for different sources of income. The third is residential status has got nothing to do with citizenship. Okay, so citizenship is actually a very different concept, and residential status is also a very different concept, and these two are not actually related. Now next, number 4. The various assessees for the residential status are an individual, HUF, farm, or the other association of persons, a company, and every other person. Now we are going to do the determination of residential status of an individual. First, we will be mainly concerned with section 6.1 and section 6.6 when we are trying to determine the residential status of an individual. Okay, first is ROR, means resident and ordinary resident. He has to satisfy at least one of the basic conditions that are mentioned in 6.1. In section 6.1, there are conditions mentioned. He has to fulfill any one, at least one of these basic conditions. So section 6.1 actually lays down the basic conditions for the determination of for residential status of an assessee. So it has certain conditions, and for a person to be ROR, he has to satisfy at least one of the conditions given in section 6.1. And there is one more criteria. He has to satisfy both the conditions mentioned under section 6.6a. Okay, so both the conditions of section 6.6a and any one of the conditions of section 6.1, and we will be able to determine the person as an ROR. Okay, so what are the basic conditions that is given in section 6.1? Now these are the basic sections. Okay, the basic conditions. To be an ROR, an assessee has to satisfy at least one of these following two conditions. So there are two conditions given in section 6.1, and he has to satisfy any one of them. What does the first condition say? Assessee is in India in that year for a period amounting in all to 182 days or more. So at least he should be in India for 182 days, or he can be in India for 182 days or more, and that will be the first condition of section 6(1)(a). And the second condition would be assessee is in India in that year, means the particular previous year, for a period amounting in all to 60 days or more and 365 days or more during the 4 preceding previous years. Okay, that is section 6(1)(c). So these are the two conditions of section 6(1). First of all, the first condition is assessee is in India in that particular previous year for a period amounting in all to 182 days or more. And the assessee, the second condition is the assessee is in India in that previous year for 60 days or more and 365 days or more during the 4 preceding previous years. Okay, so he has to satisfy any one of the conditions that is given in this section 6(1). Okay, I hope section 6(1), the two conditions of section 6(1) is clear to you all. Now we come to the exceptions that we have to keep in our minds. Okay, now what are the exceptions? In the case the assessee is an Indian citizen, then the above mentioned rules will be subject to the following exceptions. Okay, so if he is of the Indian origin, you have to remember one thing: these exemptions will be effective only if the assessee is a person of Indian origin. Okay, then the following exceptions, there are only 3 exceptions that you have to keep in your mind, and the 3 exceptions are as follows. The first one is an Indian citizen who leaves India in any previous year as a member of the crew of the Indian ship or for the purpose of employment outside India. Now if this happens, so if the assessee is an Indian citizen who leaves India in any of the previous year as a member of the crew of some Indian ship or for any employment outside India, then the period of 60 days that is mentioned above will be taken as 182 days. Okay, then the period of 60 days that is mentioned in the first condition of section 6(1) will be taken as 182 days. Okay, now we come to the second exception. The second exception is an Indian citizen or a person of Indian origin who was outside India and comes to visit India in any previous year. So he is a person of Indian origin and he was staying outside India, but in a certain previous year he comes to visit India. Then what happens? In any previous year he comes to visit India. The period of 60 days mentioned above will be taken as 182 days. Okay, so the 60 days will again be taken as 182 days. Now we come to explanation 2 of section 6(1). Inserted in 2015 Finance Act, okay, with retrospective effect from 2015-16. Now in this case, if an Indian citizen who is a member of the crew of a foreign bound ship leaving India, then the residential status will be determined as per the prescribed conditions only. Okay, I hope the exceptions are clear. So when we are assessing, we first have to take into the ROR of an assessee. If it's an ROR, then he has to satisfy any one of the conditions of section 6(1) and any 2 conditions. Now we come to the additional sections, in which that is section 6(6), where he has to satisfy both the conditions of the sections, section 6(6)(a). When an individual fulfills any one of the conditions, he shall be called a resident of India. Okay, but in order to be a resident, an ordinary resident, he has to fulfill both the conditions that are given below. So I hope it is clear to you. Now what are these 2 conditions? The assessee has been a resident in India in at least 2 out of the 10 previous year preceding the relevant previous year. Okay, that is the first condition that he has to satisfy in order to be the ROR. And the next condition is that the assessee has been in India for a period amounting to in all 370 days or more during the 7 preceding years. 7 years preceding to the relevant previous year. So, what are the two conditions of section 6.6 that an assessee has to fulfill? The first is that the assessee has been a resident in India in at least 2 out of the 10 previous year preceding the relevant previous year, and he or she, that is the assessee, has been in India for a period amounting to in all 730 days or more during the 7 years preceding the relevant previous year. Now, I hope it is clear for an assessee, if you want to assess whether that assessee is an ROR, then I hope it is clear what you need to judge. You need to judge whether he is satisfying any one condition of section 6.1 and both the conditions of section 6.6. Then only you will be able to call that assessee a resident and ordinary resident. Okay. Now we come to the RNOR, resident but not ordinary resident. Okay. Now, an individual or an assessee is said to be a resident, not ordinary resident in India, if he satisfies any one of the basic conditions that you found in section 6.1, but does not satisfy both the additional conditions mentioned in section 6.6. So that way it is quite easy. So if he satisfies any one of the conditions of section 6.1 and none of the conditions of section 6.6, then we can call him resident and not ordinary resident. Okay. Now there is an exception. This has been newly inserted. Exception number 1. Under this exception, an individual assessee shall be deemed to be RNOR in India if he is a citizen of India, his total income, other than the income from any foreign sources, exceeds rupees 15 lakhs during that previous year, and he is not liable to tax in any country or territory by reason of his residence or domicile on any other criteria of the similar nature. So what are the exceptions that you have to keep in mind? These have been newly inserted. Exception number 1 is under this exception, an individual assessee shall be deemed to be an RNOR if in India, if he is a citizen of India, his total income, other than the income from any foreign source, exceeds rupees 15 lakh in that particular year, and he is not liable to tax in any country or territory by reason of his residence or domicile or any other citizen, any other criteria of the similar nature, then he will be considered an RNOR. You understand? He will be deemed to be an RNOR. But the most important criteria is, of course, satisfying any one of the conditions of the section 1 and none of the conditions of section 6.6, then we call him an RNOR. But under the new section, there are certain persons who can be deemed to be an RNOR if these 3 conditions are fulfilled. Okay. The second exception that is also been newly inserted, an individual shall be deemed to be an RNOR in India if these following conditions are there. The first one is that assessee is a citizen of India or a person of Indian origin. His total income, other than the income from foreign sources, exceeds 15 lakhs during the previous year. He comes to India on a visit during a previous year, and he is in India for 120 days or more, but less than 180 days during the relevant previous year. And along with that, 365 days or more during the 4 years preceding the relevant previous year. So there are only 4 criteria that you have to keep in mind when under those circumstances, you will have to consider the assessee as a deemed RNOR. Okay? These 4 criterions need to be kept in mind. So till now we have done how to assess whether the assessee is an ROR and how we will assess whether he is an RNOR. And please don't forget the exceptions. Okay? Now we come to the third category, that is the non-resident Indian, that is NRI. An individual is said to be non-resident in India if during the previous year he does not fulfill any one of the basic conditions mentioned under section 6.1. Now fulfillment of additional conditions is not necessary at all. Okay? So now we have come to the third point, the NRI. An individual is said to be an NRI if during the PY, that is the previous year, he does not fulfill any one of the basic conditions under section 6.1, and the conditions of section 6.2 is absolutely irrelevant in this case. Now there are certain important considerations that you should keep in your mind. The first is the requirement of physical presence in India is cumulative in nature. Thus an assessee did not stay in India at a stretch, or does not need to stay in the same place also. So it is not that he has to stay at a stretch for 60 days or for 182 days or whatever. So it can be divided. You can add up the hours he was there in India, and a 24-hour would amount to 1 day. Okay? Now while calculating the number of days stay in India, the date of entry and the date of exit needs to be taken into consideration. A day is 24 hours and so can be spread over a number of dates. Stay on a yacht which is moored in the territorial waters of India shall be treated as stay in India. And the fourth point is a person shall be deemed to be of Indian origin if he or either of his parents or any of his grandparents was born in undivided India. Now these are the various criterions, and this is how we will be able to determine the assessee. The assessee, he can be an individual, he can be an HUF, a firm or associations of persons, a company, or any other Therefore, that assessee, he can be, we have to assess the residential status for the purpose of determining the charge of tax on his total income. So we have done how to assess whether he is a resident or non-resident or not, or an NRI. That we have all done. And in the next class we will be doing certain criterions that has to be kept in mind while determining his income for the assessment of tax. So I hope you have understood what we covered in this class, and if you want my notes you can just call me. My number is given over there, and I hope you enjoyed the tax session. Thank you, children. We will meet with the assessment of tax, the residential status only.